Hi, everyone. Welcome back to Atrium Research's YouTube channel. Today, I have the pleasure of interviewing Peter Gianulis, the CEO of Allegiant Gold, which trades under the symbol AUAU on the TSXV. Just quickly for a quick overview before I hand it over to Peter, Allegiant Gold, it's a new company that we've recently initiated coverage on. It's a gold exploration company with 5 assets in Nevada. Its flagship asset being the Eastside district, which hosts 1.4 million ounces of gold and 9 million ounces of silver. As announced this morning, Allegiant is planning an updated mineral resource by Q1 of next year, which should be a major catalyst for the company, given it hasn't updated its resource since 2021. We currently have a buy rating and a target price of 50 cents on the company. Peter, thanks for being here today.
Hi, Ben. Thank you. And thank you for everyone for listening to our story. I'll start out a little bit about the history of the company very briefly. Allegiant was founded in 2017 out of a spin out of Columbus Gold. The Eastside district was staked by us and our team back in 2010. We made our first discovery in 2014. At that time, Columbus Gold had multiple projects, including a project in French Guiana, as well as approximately 17 or 20 projects in Nevada. When the spin-out occurred, Columbus Gold created 2 companies. One was called Allegiant Gold and one was Aurea Mining. Allegiant Gold is what I'm focused on, and I've been CEO since September 2019. At that point, we had advanced Eastside to a 700,000 inferred resource of gold. Back then, that was the first maiden resource. And we had a collection of about 13 other different projects within Nevada, Arizona, New Mexico, and Utah as well. My first goal, given the state of the market, which was pretty bleak at that time, was to generate or find a path to generate additional cash without relying on the capital markets for fundraising. And we embarked on a 2-prong approach, which was focused on farming out our non-core projects, focusing on Eastside, but also trying to bring in strategic investors into the company that would help us finance in a relatively non-dilutive manner. So quickly, there's a disclaimer on Allegiant. Our mission is pretty simple. It's to increase the value to shareholders in the most accretive manner possible. And we believe that the best way to do that is through exploration and development. Our team, previously at Cordex and led by the same team since Allegiant was founded, is responsible for the discovery of 7 or 8 actual operating mines throughout Nevada, is widely credited as the most successful team in Nevada over the past 50 years. Some things, and I'll focus most of my time on Eastside, even though we do have some other projects. Eastside is some of the great characteristics about Eastside is clearly the mining jurisdiction in Nevada, and I won't focus a lot of time on that because everyone knows that Nevada is really a great jurisdiction. But I will also focus on the actual specific location where Eastside lies, which is about 30 kilometers to the west-northwest of the town of Tonopah. There is there's electricity on our property that runs through the northeast part of the property. There are water wells. There's a main highway that goes to the south end of the of the project. You actually enter Eastside through a highway, which is connecting with a gate that goes directly into the southeast part of Eastside. And it is a very large property of approximately 80 square kilometers, over 22,000 acres, and about 1,200 claims. We've only explored on a very small amount of Eastside, and there is significant resource expansion potential at the project. The management directors, led by myself and Sean McGrath. I will also highlight Sean Nichols, who's been on the board since we started, and Sean is probably one of the most foremost experts on junior mining that I've ever come across in the 25 years that I've been in the industry. And then Norm Pitcher. Norm recently rejoined us on the board. Norm was on the board since the founding of Allegiant to 2021. He took a role as the CEO of a company called Ensign, a private company, which was recently sold, and he has recently rejoined our board. Norm was a former president of Eldorado Gold. Characterizes us as financial discipline. Financial discipline primarily because management insiders are significant shareholders. Management owns 14% of the company. You add another 4% for directors, and insiders own close to 20% of the company. Most of those shares were bought after we took over the company in 2019 through open market purchases. Our farm out strategy is what we employed in 2019. It has been extremely beneficial to us. Our farm out strategy can be summed up by three things. One is we look to receive cash and shares of the farm out partner. Two is we look for a work program. And three is we generally try to retain an interest on those projects. That has generated over $7.5 million US, close to 10 million Canadian dollars over that period of time in terms of money that has basically gone into the ground. We have one of the highest ratios of money into the ground over the total cost structure of the company. And then finally, our complementary assets, four of them, one of them being Bolo, which is farmed out, and now a JV with Copar. Two is Goldfield West, which we own 100% of, right next to the Gemfield project being developed by Centerra. And then Browns Canyon, which is in the Battle Mountain Trend, and Eureka, an excellent project, which unfortunately we just are too focused on Eastside to be able to spend any real capital there. And fourth is Overland Pass, which is right next to the Bald Mountain property operated by Kinross. We do not have any warrants, outstanding warrants. I've spent the last 4 to 5 years to get rid of warrants out of the capital structure. We like to have a very clean structure. I'm not a big fan, as most people who know me, of those warrants, of issuing warrants. The market's going to dictate the terms, and I'm not saying we will never issue warrants, but we did our best effort to get rid of and keep a very, very clean capital structure. I'll highlight a little bit about about our institutions that have taken a stake in us. Kinross came in 2021 and bought a 10% ownership stake of Allegiant. Eastside is 100% owned by us. Kinross has taken a 10% ownership of Allegiant. They've been an excellent partner for us. We have formed a technical committee, which we religiously adhere to with them. They have been excellent partners for us. They provide excellent guidance and information for us. Their Bald Mountain project is straight line to us, is about 30 to 35 miles away from Eastside, and very similar characteristics. Kinross has been very, very transparent and open with us on what they would like us to do in the future. IAMGOLD is a large shareholder, 4%, and then our retail institutions led by Ingalls & Snyder out of New York, which is a large shareholder. We talked about the Eastside District. I won't spend a lot of time. It's a high-grade epithermal vein system. Some of the best oxide hits that over the past 20 years are particularly led by our drill program in 2021. And we are seeking now to replicate that or to re-drill part of that system later this year as part of our ongoing drill program. We talked about it, 92%, 92 square kilometers of district. We have about 1.5 million ounces of gold, close to 9 million ounces of silver. We've drilled about 80,000 meters. We do believe and are very fervent believers of drilling. Given the size of this property, which is a district-sized property, not just a small, potential gold project, we believe we have the potential for numerous potential pits on the property. The property we discussed is located, as we talked about, on Highway 95, which is the entrance to our property and cuts through the Castle area and the Castle Zone. McIntosh is at the northern part of that area. And as we discussed, we do have a high voltage power line that runs through the northeast corner around this area that cuts the property. Gold occurrence, I won't go through the geology in depth, but primarily some of the control systems that we've noticed and have discovered is that the gold has generally occurrred in the context of rhyolite domes. So we've mapped over 25 rhyolite domes in our property. We've only tested about 5 or 6 of them. There are significantly more buried rhyolite domes throughout the property. But today we are focused on 2 main zones, the McIntosh zone, which is where the bulk of those resources lie, and the Castle, which is on the southern part of the property. So you have McIntosh at the north, Castle at the extreme south, and yet you still have probably 10 kilometers between those 2 zones, which have yet to be tested or drilled significantly. We've talked about the resource. We believe that there's significant opportunities to continue to increase on both zones and other zones to be discovered. Once again, more information on the inferred resource. We used a 0.15 gram cutoff. We could have easily used a 0.3 gram and got too close to 1 gram a ton if that was the goal. And only lost about 100,000 ounces in turn. We do believe that our goal right now is to continue to increase the resources at McIntosh and at Eastside. And here we talk a little bit about the potential for growth. The blue area is the current resource. The red is the potential expansion resource. We need more drilling within that area to potentially expand the resource. But we do view that the McIntosh could be a very, very large deposit in itself. Castle is on the southernmost part of the property. It's closer to surface. It'll generally will have a lower strip, but also starting at surface, and it's an oxide deposit as well. Very, very, at least on the surface, looks like a perfect heap leach type of operation, open pit. Once again, Castle has not seen a lot of drilling in the past. We started drilling a few years ago and have drilled approximately 70 to 80 holes. We believe that there continues to be significant amount of resource expansion potential within that zone. And as you can see on the pink area, additional resource potential to grow that. Castles, we've broken it up into 4, call it subzones or potential targets: the Castle, the Boss, the Berg, and the Black Rock. The Boss is a former producing mine. We believe that there is significant expansion on the Boss in particular. There is a heap leach on the property and dumps there, and we did some testing there, which it showed some very, very promising initial results. But we're now turning our attention to the northern part again to drill the McIntosh and around those exploration targets there, and then we'll probably come back to Castle. We're working on a plan of operation right now, which should be completed in the next 3 to 4 months. So our ongoing work, we've initiated a 5,000 meter combined core and RC program to a little bit different. The RC program will test targets in and around, primarily around the McIntosh zone, looking for additional resource potential, primarily on the East Pediment, which was a discovery we made a few years ago. On the core program, we will test the South Hill as well, which is on the southernmost tip and slightly outside of the pit zone area of the McIntosh. And some of our best geochem and geophysics has been around that area, and we have yet to test it. So we'll test that, as well as come back and test hole 239, which was not achieved in 2021 retest or 2022 drill program. And so we want to go back and test this because we weren't able to reach the target on that program. Our next steps, ultimately our goal is to continue to increase the resource. This is a very large project, and we believe there's significantly more resources to be found here. But we've highlighted the potential for an additional resource estimate, and then looking at either a scoping study or a PEA, which would be the next step for us. In summary, we do have a huge land package at least 7 or 8 additional main zones, not just targets, main zones for additional exploration. Permitting in Nevada, I think permitting everywhere has gotten difficult, but there's a very clear path at Eastside. We just believe there's significantly more upside available. And to be fair, if we were in a great market in the junior side, this is something we would advance far quicker. With that, I will turn it back over to you, Ben. I tried to be efficient with time, but I please feel free to ask any questions you may have.
Yeah, no, thanks a lot. Brief, but you covered most of the items that I wanted to talk about. Just going back to the drilling and the drill program that's going on at Eastside right now, you mentioned the different targets, but in terms of a focus on grade or size and expanding the footprint, what is the focus of this program right now?
Well, it's actually both. So on the RC program, it is resource expansion and additional exploration targets around close within proximity of the McIntosh zone. If we're able to be successful with this program, then clearly either it's a new pit or the pit shell expands. But on the other side, on the flip side, the core program primarily is to retest some of the high grade zone that we discovered and in 2021 and prove that out, because I think that Eastside, our goal has always been is to increase the resource and find higher grade zone, which could be the starter pit area.
Mm-hmm. Yeah, no, makes sense, and that surely helps with the economics of a future mine. I know you've been drilling for a few weeks, 4 weeks or so. When do we expect some assays to start rolling in, and then when do those will probably continue into the new year, I believe?
Yeah, so we've drilled 10 holes already. I think 5 or 6 are in the lab. I would anticipate that within a few weeks we'll start getting some results. And our strategy and our modus operandi has always been release things in batches as we get them, as opposed to leaking out a hole by hole. We feel that it's just better to release things in packages. So as soon as we get the first 3 or 4 or 5 batches, we'll process those and get those and interpret those and then get those out to the market. So I would anticipate that in the next 2 weeks. But I have spoken to the labs, and they are working very, very efficiently. There's not long delays any longer.
Mm-hmm. Great, that's exciting. Having some catalysts coming in the near term, and then additionally on drilling, I know we didn't speak too much about Goldfields West, but you have expressed the plan to drill about 2,000 meters of RC this year and into early Q1. Can you just touch on that very briefly?
Yeah, Goldfield West has always been our second ranked project in our entire portfolio, even when we had 10 projects. And it is, from a geological setting, one of the most attractive properties we have. It's right next to the historic Goldfield district. Centerra is developing the Gemfield mine, part of their Goldfield district projects, and we're a few kilometers away from that. We've shot Air Mag as well as CSA MAT. There's a historical resource at Goldfield West, and we just couldn't get ourselves to spend money and divert money away from Eastside, because it's just such a large project to do something. Now we're in the situation today, and we're in the predicament that we have to spend a little money for an agreement that we reached with another company, in which we lease some of their claims. We have 200 claims, of which 120 are staked by us, and about, I believe, 70 or 80 are staked by another company. So part of the agreement was that we were going to do some work programs, and we've complied with that for 2 years, and by mostly geophysics and geochem. But now we believe it's time to lay down 8 or 10 holes there to test some of the theories that we've had there. So that'll commence later this year.
Okay, great. Yeah, no, it's certainly an exciting project. Obviously frustrating. You'd love to be able to have the capital to deploy major drill programs at all of these assets, but nonetheless, it will be exciting to see those results. So then going back, I know you touched on this already, but you guys really stand out in this regard, and it's the financial responsibility of the business, limiting shareholder dilution year over year, really since you got involved in 2019. So not to, mention it too much, but can you just break this down a little bit more? I know you've brought in roughly $7.5 million in non-diluted funding over the years, much more than most businesses out there. So can you just break this down a little bit more for the listeners?
Well, we look at, I mean, we're financially disciplined primarily because I think that is part of our DNA, but I also think that there's the aspect that we actually have real money, of our own money, invested in the company. We've purchased 17, 18 million shares in the open market. So with our own capital, not just myself, but the management and director. So there is we have a vested interest to keep the shares and not issue paper, and particularly, warrants. And we've been able to finance our drill programs primarily through our farm-out strategy, but also doing a financing directly with Kinross back in, I believe, in 2021, where they invested, I believe it was $4 million for a 10% stake of Allegiant, and henceforth, those are the types of deals that we've done. Farm outs allow us to receive capital in cash and also shares of companies, which have been extremely beneficial to us. And as a whole, we've made money on these trades of these companies where they've given us paper. So we'll do a deal, we'll get a paper issued at 42 cents, and in general, or 50 cents, and in general, we have been able to sell it or to monetize that investment at rates higher than what was the deemed price of receiving those shares. Part of that reason is that we are very reluctant to do a deal, a farm out with a company in which we don't believe in either the management or their ability to advance the project and the company. So we look at all farm out partners very, very seriously. When we get multiple offers on our additional projects, including Goldfield West and Browns Canyon. But if we don't believe that, one, they're going to advance the project, and two, we're going to get compensated for that, we just won't do a deal. And that's our philosophy, and that's how we continue to do that. And we still have some great projects that we could farm out. In the context of gold at 2,600, I would have thought we would have been the junior market would be significantly higher. That has not been the case, and the TSX venture continues to be close to an all-time low, as opposed to an all-time high, and significantly closer to an all-time low.
Yeah, no, it's obviously been very frustrating for the both of us in that regard. And that does sort of lead me to my next question, and the last one I do have for you, which is the Allegiant story. It's not super well known on the street. I know that you've conserved capital over this, quiet period in the market over the last couple of years. So maybe you could just touch on where you believe the market is now and what you guys are doing at Allegiant to start getting the name out there, and beating the table on what a high quality story you have.
Yeah, I think that's a fair statement. I'd like to highlight one aspect, as I tend to look at data as opposed to just whatever the noise is out there in the opinion. If you look at our peer group within the Western United States in precious metals, no company has outperformed Allegiant over a 5-year period of time. Since I choose 5 years because that's how long I've been there. So we are the number one performing stock over that period of time, and I think that is based on two factors. One is I think we have probably the best project out there with the most potential, and second, I believe it's just that financial prudence and discipline where everyone speculates that we're going to have to raise money, and we just never do. We haven't raised money in over 2 years, and we don't necessarily have to raise money now. I mean, it's nice to have more money because we can advance the project a lot quicker. Now, specifically to your question, I think it's part of who we are. We try to lead with facts and by data as opposed to promotion. But I do think that we are trying to get the word out a little bit more, and doing programs and talking with investors and YouTube videos is something that we're going to be doing. We're going to be on the road more now. I'll be on the road actually the next 2 weeks, then come back and on the road again for another week. We're going to be doing conferences in October, November, and in January and February. So we are going to spend a little capital in trying to get the word out. We'll do a web conference coming up, in a few weeks as well. And I think that part of that is just getting the news out to investors and have those people and individuals be able to ask those questions that they want to know. I mean, with us, it doesn't mean that they're going to love everything that we do, but we're always aligned with the shareholders, always. I mean, there's no other company that I know of that is more aligned than us. And the message is clear. We need to get out there and tell our story, and we'll try to do that.
Yeah. And for the investors who follow our research, we published our initiation report not too long ago on Allegiant, and you'll be able to see the comp table of those Western US peers of Allegiant. You can see our comparison on the project level, but also the shareholder dilution and performance as to what Peter just broke down for us. So with that, Peter, thanks for walking us through the story and answering a few of those questions. For the viewers, if you haven't seen our research on Allegiant, again, that's at atriumresearch.ca. And Peter, thanks for the time today.
Thank you very much. You have a great day.